Welcome to TradeTheMBI.com. This is John. This report is for March the 1st, and we begin the new month right where we were looking at before. We're still hovering right above this 93.50 algo level. At this particular moment, we were below it earlier in the day off of the weak signals, but we've started to see a turnaround already, as we expected with the steel coming from underneath here. We still had the rising, well, in this case, blues, not as significant as the meeting point, but it's at a critical juncture here of the shakeout because we've just started to ease a bit, and that will need to turn up. If we look at value from yesterday, you can see it right down there, 784, and we're starting with an 832, which means we've already got a beginning of an increase. So it'd be effectively what happened right here. And even on this little dip right here where we first started with a soft signal. But as we pointed out with this DOC spread, again, same situation where we had the deep reset of the steel and immediately increasing that extreme histogram, making that little green line, and sure enough, it turned right at the 76% support. So it was no surprise then. We've had a couple of these little warnings with the magenta candles on the specific DOC spreads that form short snakes, but they haven't produced a whole lot. We didn't expect them to either, simply because of what we were seeing from this strong momentum from the shakeout. And it's beautiful. ABM continues to hold its support. If we look at what that value is, 73. It's been the bottom side range. I think that was like right over here. We had 75, and that was the low period of it. And we're going to start the month now where by the 5th, we'll have had this reset and new fund money comes rolling in. That's how it works. You know, despite everyone's talking about how their indicators are, most extreme overbought for all this period of time. Well, it's not, because we're seeing that there's been a complete reset of new money available each time with the resets of the steel. It's not like we had these extended short periods where we stayed here with steel above the entire time. Once it reset, there was a complete new momentum shift. But a lot of people don't see that. Euro's been in a reasonably elevated area. We're hitting that 50%, so we knew we were going to get some softness right there. We have the cyan moving, and now you have the steel below. That's going to present even a little bit more weakness to it. But it's still elevated enough to support the move on the S&P. This recognition has caused gold to, well, just do what we expected, which was refill the positive extreme, which was the low right here at 124 range and right at the ABM green. So we'll be able to see if that has a turnaround. You can see what happened here. This is where, again, where I talk about that gold. Azure met, that was the first warning sign right at the ABM yellow, and then it just confirmed itself with that breakdown. That's why we look at that from a long-term standpoint. So we flip over here to the 5K. That looks like a busy chart. Let's just scroll it over and talk, because it was kind of interesting from my standpoint. From that 2800, really was looking for a move lower right around this 93, and we had pivoted right around it, and it had been resistance for a while. And the other day, every time we got to it and had a short signal, I was more than happy to attack that, looking for positive extreme fills, whatever the nearest support setup was. And then we just kept bouncing, but every time we hit it, boom, rejection, and that led to breakdowns, even right back to the zero levels. But we kept getting a lot of these P2s and X's right about the same time we were ending up getting gold readings, which typically when we see those above 50%, we look for the highs to be touched. Below 50%, you really have to start seeing some significant moves from a shakeout or DOC. And what I always look for in those particular cases is I've got this previous pivot right here where the last high was. I've made my new low. Well, then it makes another pivot. Well, that then becomes my focus point at this value right here. And as soon as I get a dip that then pops up, and boy, doesn't it happen right when you get also the orange and everything, and that is your signal to go for it if you're looking for the very strongest of configurations in that. And that led to move right to the 100% as expected. Then it's clean. And then we ended up with the DOC spread. Just after that, I took a little bit higher. I got up in the 95s for my short range. when we were over there, and that led to a whole nother retrace. In this case, it actually broke the lows, and this is something I talk about often. You'll see when you immediately break a low like this, and then you get an orange dip, usually what you're looking at in this particular case is they're going to try and float back up to what the break of that low was, and usually tries to get to the 23%. I usually look at that point to see where I'm at strength-wise, because if I don't have green over cyan, I usually just look to short back, because oftentimes, even if it's just a wick candle, they'll come back and retest, at least the opening of that break above below the low here, and that's exactly what it did, and it just revisited. Now in this case, it didn't have a dip below the red line, so there was no guarantee that you were going to get a new low or that it was going to come all the way down, but I usually look for mid-range between that 0 and 23, and it invariably works almost all the time. And then even in the pop that came through, was still enough to cause to all the way back down. This is how they clear those shorts in the after hours period, and became an immediate reboot. And you can see that there was just never any change in that rising red DOC, the little down pivot right there. Still didn't take out this previous one, which was right here. And you'll see this is where I have sometimes these multiple lines, and I just keep moving the little target to each of those and just wait and see if my DOC red stays above those. And again, same thing with the pivots on the downside. You come down, turn around, and then you break above it. Hey, you've got yourself another opportunity. This is where the P2 was created from that concept, looking for those moves that then come up and break above the previous. And of course, at that point, you're looking at a continuation where you got to get above the 7.5, and then of course above 0 after that point. And this takes us to where we're at right now. Just the break above the 93, which means we're likely going to come back and revisit it, because all of it is positive extremed all the way down to the low right here of 89.25, which will take us right back to it. But eventually, that's going to become the floor, the 93 level, and we've seen where we've traded back and forth across it. And this is just a matter of the market acquiring a new position, because they're going to trade on both sides of a particular range, and unless you know that that 93 was there from a previous algo, it's just going to bypass you. Them new ones are created all the time when we get these new levels. In this particular case, the positive extreme taking place here closed at the 93.75. The 3 ticks over, but then the low of this with the positive extreme at 89, so still right around that same range. And what they look to do is acquire a position where sometimes they're above it, sometimes they're below it, and it equals out right into their range. And that's effectively what they then draw their next movement off of. And if we really wanted to examine that, well, we could look at a 50K, and you could extrapolate from the low to the highs and project your 50% move up from there, which is literally going to take you right back up to that 28.15 range. Happens over and over. This has been pretty soft from a 50K standpoint. We've had a pretty steady flat DOC red, which is why most of this action has been intraday. And then once we start to see that actually move up and break into the new zone, we'll actually get a bit more of an effective setup. But you can see the difference between where these ones liked it up in the red. The new pink bar didn't like it until right about here with the X1s, and that was just below. That was at the 91 level, and still nothing super duper yet, but pretty consistent from there. And we don't have an oversold with the shakeout. So once this turns to positive, then you'll be in your potential stretch for another nice up move. So we'll keep an eye out for that. But I think it's a nice way to start the new month, and I think that we're going to see a bit more volatility now than we had been seeing. This has been a build-up. And a lot of it contrary to what a lot of people have expected, because they're expecting, all you hear about is these horrible readings for the weakest numbers in the last 2 years, blah, 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 blah. GDP didn't make this, that, or the other. But Of course, it's winter coming off of the whole government shutdown thing. There's a little lag in what to expect from that. So sometimes you get caught up in all that data, it's just a bunch of noise. The key things that we're looking at, whether it's oil drawdowns, euro, gold, these are things that are telling us, where money is moving and what to expect from it. And at this particular point, we still don't have anything that's red flag warnings, telling anyone to run or do anything crazy. This small dip below the zero, if we see that red flatten out from a daily standpoint, it'd be not much different than what we saw right here on the brief dip down turn. And as long as that shakeout is maintaining its positive and actually moving into higher, you're just going to get normal range. And that's still going to be significant. So it still leaves plenty of room in both directions, I think, for trade. So I'm not afraid to take either direction with it. So we'll just keep playing it as it is. I'll update relevant charts. We put up a bunch of these different ones earlier on as it was happening live, because we could see which ones we're going to break down, which ones we're going to continue. All pretty clean stuff. It's the same difference with like this short as it was going here. And then once this orange gets caught in between, even when we had the little dips of orange, you could see that we were still stuck with orange caught between cyan and red, which is just a continuation move of the lower. So there wasn't much of a change. So when this finally broke back above and you're heading down towards the new lows, you didn't have any reset that was going to cause for a buy configuration until it finally broke down over here after having made the previous low, breaks down here, and then comes resets, and that's when we started with the higher shakeouts. But again, you put stops too tight on this little bit of a breakout, and sure enough, you'd be like kicking yourself, oh, it was green, and then it goes to red. That happens a lot. You either have to be prepared to exit and then have a re-entry back at your same spot where you then trail lower, or even if you're shorting it, just depends on how active you are with that setup. We're able to handle both configurations either way. But no new low was made, so even if you were staying with this long, you would definitely still have your stop significantly underneath that zero until you, well, in this particular case, breaking above the 50 would be one of those situations where I would be more having the stop closer to better than break even. But even then, even if you get stopped out from that, you're able to re-enter on a move back up, and that's exactly what happened here, and it takes off. And that's what they do. They're designed to try and shake you out of setups that are still improving, because they're always hunting for extra contracts in order to scare out weak hands, and that's why people have a lot of difficulty. But it's very helpful when you have your little Morganacci set up and you know that you haven't really deviated from anything that's been going on, because nothing abnormal happened within this setup. They're looking, and particularly in after hours, they love to do this because most people, oh, well, I had a decent gain, or I was short, and so I'll just put my stop in, and then you get your little blow-up move, and that usually creates a significant amount of more buying, because you get people positioned too strongly in one direction, and they can see an imbalance. And it doesn't mean that we aren't going to come back to it. My feeling, though, is based on what we're seeing from the daily and flatness of those areas, that this has been a strong accumulation from some significant buying. So that's the long and the short of it for now, but I'll keep updating so we don't make this thing too long on the Skype chat. Trade well, we'll talk again later.